Welcome back from Las Vegas and the Consumer Electronics Show. We are waiting on a press conference between Senators Schumer, Dodd, and Durbin about the ongoing talks between Citigroup and the government. Diana Olick broke the story earlier. She is right now in Washington with the very latest. Diana.
Well, Maria, as we said before, we learned that talks have been going on all week between Citigroup and Senators Schumer, Durbin, and Dodd. We'll go right to that press conference now.
One of my co-sponsors from the beginning. And John Conyers would be here but has a conflict and certainly supports what we're here to announce. We've had a breakthrough today in proposed legislation to change the bankruptcy code so that those who are facing mortgage foreclosure have an option that currently is not available under law. For many years, those who entered into bankruptcy could take parcels of real estate that currently represent second homes, vacation homes, condos in Florida, farms and ranches, and if they were facing foreclosure, the bankruptcy court could basically rewrite the mortgage so that they could stay in their homes if it was a possibility. We specifically, under the law, excluded the principal residence. Hard to explain, but for years, every other piece of real estate you owned, subject to foreclosure, going into bankruptcy, could have the mortgage rewritten by the court, but not your principal residence. So as a consequence, going into this mortgage foreclosure crisis, many people with their homes at stake facing foreclosure headed into bankruptcy had no way to have the mortgage rewritten in the bankruptcy court, even if they still had an income and a change in interest rate or principal was all they need to stay in the home. So I've been trying for almost 2 years now to change this. It was controversial for the longest period of time, opposed by many associations and major financial institutions. But today I'm happy to be joined by my colleagues, Congressman Chris Dodd, the chairman of the Banking Committee, and my Senator Chris Dodd, chairman.
He was once a congressman.
Formerly a congressman, now Senator Chris Dodd.
Happened here. I didn't.
Yes. As well as Chuck Schumer, who has been a leader on so many of a leader on so many of these issues, and Brad Miller and others who have come together to make this a possibility. Today we're announcing that Citigroup has joined us in an effort to change this bill in a way that they can support it. The changes they have asked for, we believe, are eminently reasonable. What they've asked for is that these provisions would only apply to existing mortgages, not prospectively. Secondly, that the person who is taking advantage of the restructuring of the mortgage in the bankruptcy court at least contacted the bank or financial institution at least 10 days before filing bankruptcy to try to work out the differences and negotiate. And finally, that if there are any violations of the Truth in Lending Act of a minor nature, not major nature, which would lead to rescission, that would not lead to voiding the mortgage contract in the bankruptcy court. I think those are eminently reasonable. I want to commend Citigroup. They showed real leadership on this. First major financial institution to step forward and to say, we understand this is a crisis in America. The current efforts, as good as they may be, have not resulted in a dramatic change or reduction in the number of mortgage foreclosures. Now, let me tell you what I think is going to happen. I hope other institutions will follow suit. I've been on the phone today, others have as well, reaching out to other financial institutions, asking them to reconsider their opposition to this amendment. If they'll join with Citigroup and others, and we can create a force that brings a bipartisan vote to the Senate floor, I think we can enact this, and I hope we can make it part of the Economic Recovery and Reinvestment Act that the administration is considering. If not, I hope to move it in some other fashion. The last point I'll make before turning it over to my colleagues, Senator Dodd and others, is this. The notion here is to create the environment for negotiation so that those who are holding the mortgages will not wait until bankruptcy, that they'll sit down ahead of time with the prospects that they're going to have this mortgage rewritten in bankruptcy and say, let's see if we can do it before they go to bankruptcy court. It creates a more positive negotiating environment, and I think financial institutions, many of which have held back because they're in a pool of mortgagors and may not be the sole mortgagor, many of them have held back, are now going to step forward, realizing if they don't, the bankruptcy judge may do what they failed to do ahead of time. Senator Dodd.
Well, listen, congratulations to Senator Dick Durbin.
I want to just bring your attention to one thing that Senator Durbin said, which is really interesting about that this bankruptcy provision would hopefully get many lenders to go ahead and modify loans before it ever got to bankruptcy. I want to read to you something from a study by the CBO back in January of last year. It says allowing bankruptcy judges to modify the terms of mortgage loans would give distressed homeowners another avenue for shedding burdensome debt. It might also give more mortgage lenders a greater incentive to restructure debts outside of the bankruptcy court system. Exactly what Senator Durbin said. That study, written in January of 2008, was written by the then CBO director, Peter Orszag, who just so happens to be President-elect Obama's new budget director. So you can see where all the ducks are in a row there. Now, I also want to tell you that the mortgage bankers are very opposed to this. They fought it over the summer when it was in the Housing and Economic Recovery Act, got it stripped away because President Bush didn't like it either. Their argument is, and I'm quoting from what they were saying earlier last year, granting judges the power would throw into question the value of the collateral that backs every mortgage made in this country, that is the home. Now, I spoke to the mortgage bankers this morning. They are still crafting what their response is going to be. They say they do want to work with the senators, but again, they were very opposed to this. Maria?
All right, Diana, thanks very much.